Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at the market rundown heading into Thursday, February 23rd, SPX IWM and QQQ. So the S&P 500 formed an inside candlestick today with a tightening range, and we're going to be looking for a break of this range tomorrow to indicate short-term direction. A break of 23.65.13, and we're looking for a new all-time high. And a break of the low 23.58.34, and we'll be looking to fill the gap at 23.51.16. So that will give us the short-term direction on the break of that range, and if you looked at it on the hourly time frame, it would be lower highs and higher lows, just a tightening pattern with a break imminent. The weekly time frame certainly still favors the bulls after a big bull breakout the past couple of weeks. Certainly a small range so far this week. Have to keep in mind that volume, we're going to see 20% less trading time with no trading on Monday. So volume is going to be lower, but we have to factor in that that is because, in part, that we are missing a day of trading. So we'll see if we get a bull break and new all-time highs continuing. Really nice to have this clear setup to be looking at going into tomorrow after the range is getting tighter and tighter. And the bulls are seeing sideways consolidation on the way up, hardly pulling back at all. Last sideways consolidation led to a bull break, and we'll see if that happens again. IWM continues to point itself out, or to stand out, as the clear bear of the three. If we start seeing consolidation in QQQ and the S&P 500, look for IWM bearish because it is leading the way to the downside in terms of the weakness. So we broke the low of yesterday. There's a gap at 130, make that 139.16, and we didn't break that, didn't fill that yet. And if we do break the higher low pattern, I'm looking at key support of 138.21 and 138.25. Those are both the lows of Thursday and Friday. And if we break that level, we'll break the strong higher low pattern, which is still intact. So like I said, as long as the S&P 500 and QQQ hold up, IWM is doing well. But see some consolidation in those names, and we'll likely see it magnified in IWM. So the weekly time frame showing some indecision the past 2 weeks. Upper wick of profit taking down near the low of the week currently. And we're on the verge of a bearish MACD cross. So again, if we do see weakness, there's ETFs, there's ways to short IWM to the downside. I would certainly rather be bearish IWM than I would be on QQQ or the S&P 500. Not saying we have any signals yet to go bearish, but if and when we do, which we can expect in the short term with such a big bull move to the upside, that is where I would be looking. So QQQ, we have a new all-time high 11 days in a row. That's absolutely absurd. I don't know if we'll ever see that again. And right now, we've had a strong close, so we could even see 12 tomorrow. 130.59 is resistance, and this is the technology sector because the holdings of QQQ are more than 50% technology, and the XLK technology sector chart looks pretty much exactly like this. So after 130.59, we're looking at 131, and we'll see if the bulls can continue this run here. This is like Joe DiMaggio's hit streak, 56 games in a row, and we're looking at QQQ on an incredible run that will likely take decades to see happen again. So on the weekly time frame, we are in full bull mode, no slowdown. Upper Bollinger Band hasn't really mattered in terms of resistance or support. It's just a straight shot to the upside over the last 3 months, and no slowdown in sight just yet. We're not going to be ignorant and oblivious to a pullback when it does come, but we're also not going to fight the uptrend and be looking for the top. We're going to wait for signals of weakness before we start looking to the downside. Thanks for tuning in, and we will see you tomorrow.